Welcome to the Aspire Neighborhood Revitalization and Renewal Program, restoring communities and redeveloping neighborhoods one house at a time, transitioning real estate into quality, affordable new construction and rehabbed homes. First-time home buyer presentation. Buying a house is one of the biggest decisions you'll ever make. Whether you're buying your first home or you're a seasoned home buyer, you're bound to have questions, and that's where we come in. Your home loan provider will provide a step-by-step, personalized guidance to ensure that the loan process is simple, clear, and timely. Why stop renting? A monthly mortgage is sometimes less than monthly rental rates. Owning a home allows you to build equity. Owning means you can make your own rules without landlord restrictions. Meet with a knowledgeable loan officer to learn more about the process, determine how much you can afford, and get pre-qualified. Find the right real estate agent or builder. How much do I qualify for? To determine how much you can afford, most lenders will consider the following: income, current debts, credit history, cash available. Do I need 20% down to qualify? Not necessarily. Mortgage providers offer a variety of loan options. Many borrowers do not need the traditional 20% for down payment to be approved for a mortgage. Down payment assistance may be available for borrowers who qualify. You may be able to buy a home with little or no down payment required. Loans with less than 20% down may require mortgage insurance. What is mortgage insurance? Private mortgage insurance, or private MI, can allow you to purchase a home with less down than what otherwise may be required, typically 20% down. If you are required to pay mortgage insurance, you have the option to pay it in your total monthly payment that you make to your lender, as a lump sum at closing, or both. What are closing costs? Lender fees, costs associated with processing, approving, and funding the loan. Prepaid costs, typically collected into an escrow account to cover 3 months of taxes, insurance, and interest. Third-party fees, fees charged by a third-party vendor in connection with your mortgage loan. These can include title fees, attorney fees, and the appraisal. How does my credit factor into a loan? A credit report shows the lender your history of past payments, which indicates how likely you are to make your mortgage payments on time. Your credit score, also known as a FICO score, can factor into the type of mortgage program you may be eligible for. Your credit score may also affect your interest rate, your down payment, and your loan amount. What consists of a mortgage payment? Monthly mortgage payments usually consist of PITI, which is principal, interest, taxes, and insurance. An escrow account may also be established to collect your taxes and insurance money each month. The money that goes into this account will go toward your taxes and insurance when they are due at the end of the year. What is APR? The annual percentage rate is a measurement of sorts to help buyers compare mortgage options. It includes the total cost of the loan over the term. The APR differs from the interest rate. The APR is usually higher than the interest rate. The APR includes the interest rate and other charges. Pre-qualified versus pre-approved. Pre-qualified, simple initial step to start the loan process, usually issued before a loan application is submitted. The borrower provides an estimate of income, assets, debts, credit score. Pre-approved, a review of borrower's financial circumstances, usually issued after a loan application is submitted. Review consists of credit report, bank assets, pay stubs, tax returns, employment history. Conventional financing, also known as conforming loans. These mortgages adhere to guidelines set by Fannie Mae and Freddie Mac. For most states, the maximum loan limit is $417,000. Down payment options as low as 3%. First-time home buyer options, gifted down payment options may be available. Federal Housing Administration, also known as a government loan, an FHA loan is backed by the Federal Housing Administration. The FHA provides mortgage insurance on loans made by FHA-approved lenders throughout the United States. Down payment options as low as 3.5%, typically lower interest rates. Lower credit scores and down payment requirements may be available. U.S. Department of Veterans Affairs. A VA loan is available for active duty or retired veterans and comes with many benefits over conventional and FHA mortgages. No down payment is required if entitlement is available. Potential reduced closing cost. Certain discounts are available for disabled veterans. U.S. Department of Agriculture. With the USDA Guarantee Rural Housing Program, eligible properties must be located in a rural area as defined by USDA and meet household income guidelines. No down payment required. Lower credit score may be accepted. No cash reserves are needed after closing. Jumbo financing. A jumbo loan is a mortgage with a loan amount that exceeds the conforming loan limits. These loans are typically for mortgages above $417,001. The mortgage application. You can start the application process for your home financing in the way that's most convenient for you. Online, by the phone, or in person. 1. Get pre-qualified. 2. Find the home you would like to buy or build. 3. Submit your paperwork. 4. Home inspection. 5. Loan processing. 6. Order the appraisal. 7. Underwriting. 8. Financial approval. 9. Final home inspection. 10. Closing. 11. Funding. And 12. You are a homeowner. We hope this presentation has helped by answering some of the questions that frequently come up during the home buying process. Please do not hesitate to call or email if there is any additional information you need.
The Aspire Neighborhood Revitalization and Renewal Limited Liability Company Home Build Financing Overview. The customer obtains an underwriting approval on a conforming home loan and is qualified at market rates. The loan is manually underwritten and must meet all underwriting guidelines and overlays. Upon approval, the mortgage provider will issue a construction loan with the following terms: 1-year balloon, fixed rate, interest-only payments. Interest accrues on the balance only versus the full loan amount. At completion of construction, the customer refinances the construction loan into any permanent mortgage product for which they qualify. The interest rate on a permanent mortgage can be locked in for up to 9 months, and standard extended interest rate lock fees apply. Extended rate lock fees will be refunded upon the closing of the permanent mortgage. The following conventional conforming loan guidelines apply to single-family detached owner-occupied residences. Maximum loan to value 90%, minimum credit score 680, maximum debt to income ratio 40%. Benefits for the borrower: expanded home loan product selection, which include a conventional loan or a government loan, fixed interest-only payments during construction. Interest rate protection is available with long-term rate locks up to 9 months. A 5% contingency is built in for any upgrades or changes in the initial loan approval. The interest rate for a construction loan is calculated as prime plus 1%. Large renovations can be done with the construction loan. A single-family primary residence home can be built, and these homes include site-built homes, modular kit homes, and planned unit developments. The financing provides for the purchase of lot and construction or large renovation improvements. Maximum loan amounts, standard conforming and high balance loan limits, maximum loan to value, 90% on a primary residence. Land can be owned or the land can be purchased with a construction loan. Land equity will be used as a part of the down payment. The builder or contractor must be the general contractor. The borrower cannot be responsible for any of the construction nor any of the home improvements. The maximum construction time frame is 1 year. The construction fee is $2,500 for a site-built home and $2,200 for a modular home and can be paid by the builder contractor. The construction fee covers the following: builder registration, project review, performance bond evaluation, progress inspections, and final inspections, title updates, endorsements for draws, recasting, re-recording fee. The final draw is dispersed upon receipt of certificate of occupancy, inspection report indicating 100% complete, final all bills paid affidavit. Completion certificate is signed by the borrower and the builder. Final title update, date down endorsement. Construction loan process flow. Borrower gets pre-approved. Borrower selects a builder or general contractor. A project review is completed. Borrower obtains the final underwriting approval. Construction is started. The borrower gets pre-approved. Borrower submits an application and supplies all necessary supporting documents. Borrower receives a pre-approval. The borrower selects a builder or a general contractor. The builder or general contractor cannot be one of the following: the borrower, the borrower's employer, a member of the borrower's family, the seller, realtor involved in the transaction, the loan officer involved in the transaction. A project review is completed. The following items are required to complete the project approval. Builder is registered. Complete plans, specs are submitted for review. Fully executed construction contract. Appraisal. Preliminary title commitment. Any required homeowners association or architectural review committee approval is obtained, if necessary. Builder registration. Valid and current construction, trade licensing, if applicable. Proof of general liability insurance coverage, a minimum $500,000 per occurrence, or $1 million aggregate. Signed and legible IRS Form W-9. Wiring instructions. The borrower obtains a final underwriting approval. With the lender having received all of the information needed for a final underwriting approval, the loan is submitted to the closing department. The closing department works with the title company for final closing numbers. Construction has started. The builder receives 10% minus any deposits of direct cost at closing. The balance of direct costs is dispersed as construction progresses, either with the progress payments or as a draw schedule. Draws are fully dispersed within 3 to 5 business days. Construction has been completed. The final draw is dispersed upon receipt of the following: certificate of occupancy, inspection report indicating the build is 100% complete, final all bills paid affidavit, completion certificate signed by the borrower and the builder, final title update. Time to close on a permanent loan. A month or more before completion, the borrower has selected the permanent loan type they want. This includes a conventional loan, FHA loan, or a VA loan. Update supporting documents. An appraisal is done on the completed project if the original appraisal is over 4 months old. Once the final underwriting approval has been issued, the permanent loan can close with the title company.
Here is an overview of the construction of your new home, step by step, brought to you by Aspire Neighborhood Revitalization and Renewal, LLC. Phase 1, excavation. Construction begins with the home site excavation. Your home's position is staked on the lot and prepped for the foundation. For homes with a basement or block wall construction, the concrete footing, the base on which your home's foundation will rest, is poured, and when it's set, a gravel fill is placed around the footing or under the basement slab for drainage. Phase 2, foundation. Depending on the region your home is built in, your new home's foundation consists of a slab, block, or poured wall foundation. Slab construction, forms are set and an outline of the new home begins to take shape. Underground plumbing is installed and tied into the public sewer system. After a bit of prep work, the slab is poured, which creates the foundation for your home. Block wall construction. Concrete block is laid to create your new home's foundation. Once set, waterproofing is applied and the garage slab is prepped and poured. Poured wall foundation. Concrete is poured into foundation form panels. Once the concrete is set, foundation waterproofing is applied, and drainage tile piping is installed. Underground plumbing is installed and tied into the public sewer system. Next, your basement slab is poured, and the concrete floors are finished. Phase 3, framing. Framing is the phase where things really start to take shape. Many homeowners think their home is near completion at the end of this stage. Actually, they are only about 1/3 of the way through the construction process. So while the phases beyond this one may seem much slower in progress, it's because we are getting into the fine details which may not be apparent but are vital to your finished home. In the framing phase, the subfloor, walls, and roof structures are built, and your roof is shingled, window and door units are installed, and any backfilling around the foundation is done. Phase 4, rough mechanics. Rough mechanics is the term used for the mechanical portions of building including heating, air conditioning, plumbing, and electric. This construction phase is a swarm of activity as plumbing and indoor sewer pipes, your furnace and ducts, and electric wiring, outlets, and switches are installed. Insulation is installed in the walls, and drywall is staged in each room for future installation. Water, gas, and electric utilities are also connected to your home. Toward the end of this phase, the builder will perform a drywall review with you. This review is an opportunity to go over work already done on your home and discuss work to be completed in the next 4 phases. Phase 5, drywall. The drywall phase of home construction shows progress rather quickly. Rooms are separated and divided, giving you the visual effect of each space. Drywall is hung and finished, and the ceilings are insulated. Outside brick, stone, and siding are installed, and your home site is graded for drainage and to prepare for the driveway, patios, walks, and so on. Phase 6, finish. The finishing phase is probably one of the most exciting phases. You'll see many of the selections you made come to life. This is when the builder installs kitchen and bath cabinetry, countertops, mirrors, medicine cabinets, interior doors and trim, stair rails, and many other detail features. Kitchen appliances and hard flooring, vinyl, ceramic, and hardwood are installed, and both the interior and exterior of your home are painted. Phase 7, finish mechanics. Finish mechanics are the visible portions of the rough mechanics. Plumbing hardware such as faucets, shower heads, commodes, and so on are installed. Switch plates, plug covers, and light fixtures are put into place, as are your thermostat, outdoor air heat pump unit, and register and return air covers. Carpeting is installed, and your yard is finish graded, seeded, or sodded. This is generally an anxious time for many homeowners. Your home construction process is nearing completion, and you are awaiting a finish date. Phase 8, final stage. During this final construction phase, finishing touches are added, such as cleaning the windows, floors, baths, kitchen, and so on. Building and quality assurance inspections are scheduled and completed to ensure all of the finishing touches on your new home have been completed according to your custom architectural plan. At closing, your new home will be ready for you to move into.